What's up, Mortgage Coach community? Dave Savage here. And I have as my special guest right now, Denise Donoghue from Dallas, Texas. What's up, Denise?
Hey, what's going on?
Not just rocking it out. Actually, stop sharing your screen real quick. We'll get into the Mortgage Coach demo in just a minute. There you are. So Denise, I'm doing this series on how top producers use Mortgage Coach. And you are a rock star in the Mortgage Coach community. So for anyone who doesn't know you, if you could just tell everybody a little bit about your mortgage practice, and then we'll talk about how you use Mortgage Coach.
Yeah, so my name's Denise Donoghue, aka the Mortgage Nerd. That's the personal brand that I have built up here in the DFW area. I'm also licensed in Colorado, but predominant book of business is right here in the Dallas area. I got my license in 2012 and have really just ran my business like a financial planner would. So prior to the mortgage business, I had my financial planning licenses. So my big thing is helping people by educating them with financial strategies, understanding things like opportunity costs of the decisions we make. And my passion is really being a disruptive thinker to people who just think lowest rate's the best rate, and not analyzing a total cost analysis like, well, what is that rate costing you? What's the APR? Is that additional money worth it? Or should you pay off that credit card that's got 13%? So that is ingrained in my blood and my soul. And it's why I thank you for creating a tool like this, because I don't even know how I would do it without something like this. So thank you for this amazing software.
Well, first of all, you're very welcome, but we have an amazing team of technologists and designers to create this amazing consumer experience. And then we have an amazing community of mortgage professionals like you, and you are one of those rock stars that plays it forward and teaches other people how to use it. Because let's face it, technology without the knowledge and the leadership on how to do it, what good is it? So thanks for being willing to share and play it forward. So let's get into, well, first of all, anybody who doesn't know your production, how many families are you helping a year, and what kind of loan volume are you doing?
Last year I helped 306 families for just over 90 million. So this month I think we'll help 60 or so clients this month. Obviously there's been a bit of a refi boom. So yeah, we are rocking and rolling. We should far past the 100 million mark this year. So I'm coming after you, Wally.
Yeah, Wally Elderberry, if you hear that, Denise Donoghue's coming for you, baby. And for people who don't realize, I mean, there's a lot of loan officers that don't do 60 loans a year. The majority, 70% of loan officers in America don't do that in a year. So the fact that you're doing that in 1 month, anybody who's watching this, you are hearing from one of the, not just top 1%, but the top fractions of 1% in the country. So I want to hear your why, like why do you use Mortgage Coach? What is the Mortgage Coach why?
To me, it's the only simplistic way to show people financial numbers where they can easily make a decision on what's right for them and their family and not feel overwhelmed. Because I think in a society that we're in now, with how stressful buying a home is, or potentially selling and buying a home, in the stage where lenders are usually giving a proposal is in the first 7 to 10 days of a contract. And that's a stressful time period. And so you just have to be cautious of the mental capacity that your clients are in. And if you're just sending over a fee sheet, or you're just sending over an Excel spreadsheet, and you're not walking them through the numbers or the financial benefit, people have the tendency to just be like, ugh, I'm just going to make an emotional decision because I don't have the mental capacity to understand this. And I think the loan officers that really love the financial strategy component are not only going to be the ones that will still be in business 10 years from now, but they're the ones that build clients for life, and we don't have to hustle as hard for new clients. Because there was some quote that I read where it's like, if you teach someone something, then that client will last forever. Whereas if you're just an order taker, then you're just always going to be an order taker. So you have to have something that can deliver a financial strategy, but it also has to be digestible by the client.
Got it. So we like to think that we turn advice and clarity into a competitive advantage. And it sounds like that is part of your brand. I want to give clarity and advice, and we're helping you deliver that. So let's talk about how and when do you use a mortgage coach? You know, what's the how do you use it and when do you use it?
We use it at actually several different stages. So we'll use it when a client goes online and gets pre-qualified. And if we're indecisive between, you know, you've got that 690 FICO score and should they go FHA or should they go conventional? I can't look at our Encompass and make that decision. I actually have to put it into the mortgage coach in order to determine what is going to make the most financial sense, because there's a lot of different factors. So sometimes it's at the stage of pre-qualifying. Every single time it's at when they go under contract, and by that time we've narrowed down the strategy, but now we're shopping interest rates, and so they always get an interest rate comparison. And then we're also on every review that we for our clients, and that's a tactic that we use that says, hey, we're going to follow with you every single year. We want to make sure that your rate's good. We want to make sure you filed your homestead. For people who live in Texas, there's a homestead exemption. We want to make sure nothing funky going through your loan. Maybe we can remove the PMI. There's all kinds of things. And so we use Mortgage Coach to put that back in front of our clients, because like I said, it's important to me that we build a client for life, and to do that, it's talk to them for life. So that's another way that we've actually just started doing that within the last year and a half, is utilizing it for our anniversary reviews.
So annual reviews, so that you're delivering value above and beyond the transaction. And every loan officer watching this, anytime you deliver rates and fees to a client, it's not a competitive advantage. You know, if it's rate, payment, cash to close, that's what every loan officer does. That is a commodity. And it's all about giving people options, a little bit of education, transparency, and clarity. And you can't do that at the highest level without Mortgage Coach. So let's pull up an example, because this is how you do it. So I want people to, you know, see the back end of, you know, where the sausage is made. And, you know, why don't we start? So guys, this is the advice engine. If you can click on settings real quick. You know, we know that loan officers are competitive. So we have created gamification in Mortgage Coach. You can see that Denise is a red belt, a grandmaster. That is the highest level of Mortgage Coach. She's done over 1,000 TCAs. So what you're going to see a minute from now is a TCA, a total cost analysis, that she's done 1,436. If you're new to Mortgage Coach, you'll notice that there's an onboarding game to be played. You know, did you add your headshot? Did you put in your logo? If you could scroll down just a little bit, I want them to see the onboarding. You know, did you do your first presentation? Are you using Mortgage Coach APIs? If you're an enterprise partner, we've got a lot of APIs that will auto-create Mortgage Coaches. And you'll notice consecutive logins. She is using this thing regularly. You can see that she's created 250 rent versus own. So she's helped a lot of families, you know, should I keep renting? Should I own? We've got a special report for that. So Denise, let's go into a specific strategy, go back to kind of the dashboard here and click on a family. And you'll notice, guys, in the upper left-hand corner, she could click record a video. So she could put a video on it. But Denise, let's go ahead and do live, because I know this is how you use Mortgage Coach a lot. Why don't you describe what you're doing and how you do it here?
Yeah, so full disclosure, the way that I have my team set up, so whether you're a one-man show or you have a team, it doesn't really matter who's putting together your reports for you, as long as they understand the strategy behind it. And so this is really just to tell some of you who are still, maybe that's one of the things you haven't yet delegated. I just want it to be known that I work with my team and they do the technician piece behind this, because I've trained them enough. We've done enough of these now that they know how to set this up. And a lot of the loan officers I talk to, they sometimes struggle with delegating this piece. It's not that I'm delegating the strategy, I'm just delegating the technician part of it. So it's kind of like the nurse versus doctor. The nurse is going in, asking for all the symptoms, bringing it to the doctor, and the doctor saying, okay, this is the medicine that you need. It's the same concept I've done. So in this instance, we had a client, I believe.
Hey, real quick, Denise, for anyone that's listening right now, so I've done a number of interviews. When I interviewed Jeremy Forcier, he has a team, does 300 loans a year, but he does the TCA. When I interviewed Keith Collins and Josh Metal, they both have their team do the technician setup work. I think the Keith Collins interview, he really laid it out. He showed the email that his team sent him. But just if you want to learn more about how top producers are using Mortgage Coach, there's multiple workflows, you know, and there's even some hybrid workflows where my team does this and I do this. But just to take away for this one, Denise's team does the setup and then she has the borrower conversation. So keep going here. Show us what we're looking at.
So for this particular guy, I believe that his FICO score was a 695. So he was right at the brink of, should we go FHA or conventional? And so when I'm on the phone with the client, sometimes in today's market, people are adamant that conventional is the better loan because FHA is not, and they've got their reasons for it. But this is where I say, rather than just make an emotional decision where that's saying, I think that a conventional loan is best, I'd rather make a numerical or a factual decision by just lining this out for us. So you'll notice that I've got the purchase price, which is the same. The interest rates, this is where I showcase to people that FHA does have a little bit better interest rate than the conventional options. That doesn't mean that it's a better loan, but we just highlight the fact that the interest rate is lower on FHA. Then we get into the monthly payment, and I show them that the FHA is $2,106, whereas the conventional is $162 more, and it tells you right down here, so you don't have to calculate it up. It's $162 more, and they're like, well, why is that? You know, it's very similar down payment. Well, it's because your FICO score also impacts your PMI insurance rate. And so I love jumping to this more info screen because here's where I'm showing them, although your taxes are the same per loan because it doesn't change with the property, and your homeowner's insurance is the same, this PMI is a big variable that people don't take into account. And with conventional loans, the way that the insurance rate's calculated is drastically different than FHA. And so you can see here what a big difference, and it just makes it, again, visually easier for a client to digest by seeing it side by side. In fact, if we go over to this 5% down, it's still drastically higher than the FHA, and that's solely because this person's FICO score was below a 700. And so we jump back down here. I showed them the differences in payments. This 5% down is not too much higher of a monthly payment, but what is a lot higher is this guy right here, which is your total funds to close. And I always tell people your total funds to close that we've listed here is comprised of all three buckets. It's going to be your down payment, your closing cost, and the deposit for your escrow account. And so the question becomes, you could bring $17,470 to closing with this FHA loan, or you would have to bring, what is that, 17, 18, 19, 20, $4,000 more for this 5% down option. And so this is where I like to really just wedge that disruptive thinking on $4,000 more for still a higher monthly payment. And we haven't yet gotten down to this chart yet, which is, I love this chart. But right now they're already thinking, well, is $4,000 worth it? Well, how do we answer that question logically and not emotionally? You have to go to this short-term savings, or when I'm speaking to my clients, I call this the rate of return calculator. Because what we're doing is we're comparing our options against FHA, and we're saying, what is the rate of return of picking FHA versus these other two options? Because that's how I've specifically set this up. So it's really interesting is the 3% down conventional, what we can see is it's actually going to end up costing the client more money, $6,300 more than just going FHA. And you have to ask this question early on. We have it in our loan application, how long they intend to be in the home. However long they tell me is how I edit this part of the presentation. If they tell me 10 years, that goes to 10 years. If they tell me 15 years, I'll put it to 15 years, but whatever amount that they told me. And sometimes if they're unsure, which a lot of people are, that's like a difficult question to answer when they're buying a home, is how long you think you're going to be there, because nobody really knows. But sometimes during the call, I'll edit this where if we start this out on 10 years, we'll look at these numbers and I'll say, okay, give me just a second. Let me cut this time period in half And I asked them, do you think if we cut this time period in half, it'll cut these numbers exactly in half? And logically they think yes, because you're just dividing it by 2, but that's not the case, because how this is actually calculated, and I pull this up every single time, I say how this is actually calculated is it's a way more intense calculation than just simple math. We're actually calculating the total amount of principal and interest that you'll pay into each bucket with each loan option, just the principal, remaining loan balance, what your interest in PMI that you'll pay into, closing costs, then you've got your total cost and your total savings. And this total savings is what's populating here for you. And so in order to do that math, it's an algorithm type of equation based on your interest and your remaining principal balance and all that stuff, than just thinking that you can just simply calculate it yourself, which a lot of people try to do. They look at an amortization schedule, they see what month 360 is in principal and interest, and they multiply that by 120 months, and they think that that's actually how it's calculated, and that's not the case. So what's interesting is that in this particular situation, if they were to bring that $4,000 more to closing, then they would save $1,000 at the end of 5 years. But this is where, and I do not do this as a steering. We get paid the same amount of loans no matter if it's FHA or conventional. But this is where I get really nerdy, where I look at their profile, and if I see that they've got higher interest debt, like credit cards, or I mean, nowadays, like these rates, this is a couple weeks old, but rates being in the low 3s, high 2s, it's like people's car rates and student loan rates and credit card rates are higher. So why should somebody take $4,000 and put it down towards their home if they could take that money and wipe out credit card debt that would actually yield them a higher savings than what we know to be true, which is this $1,000? And if you can show them that, now you've taught them something about finance, and you've taught them something about strategy, because they're like, well, if I pay off this credit card, that's this much interest that's going a month, that's a revolving account, that's way more than $1,000 in 5 years. Of course it is. And sometimes the numbers are so drastic that sometimes the question is, and this is important, sometimes, and people might disagree with this, but you asked me to be honest, I'm gonna be honest. So sometimes in these conversations, I could get really, really nerdy and geek out. And we could do the appreciation calculation to say, okay, if you took that $4,000 and you kept it in your brokerage account that's earning 5.2%, and sometimes I go there at this stage, and sometimes I don't, because it does depend on my client's capacity at that time. Now, that doesn't mean that we don't have that conversation, but if I've got a 3-week closing and they need to make a decision so we can get disclosures out, we will schedule a call either in the next few weeks when the loan's already in underwriting, and we call it our financial strategy call, or it is at the very least discussed after closing or on their anniversary call, because I do pay attention to a client's capacity to retain information. And sometimes you can be vomit at the mouth about something and their head's already spinning. And even though you're telling them, they're actually not hearing you. And sometimes they have to hear you multiple times. And so we do have our follow-up set up so that I go to closing, I actually print out a hard copy of their certified mortgage plan. That's what I call it. And I put it in a bound book along with a colored copy of their appraisal and their closing disclosure and their first payment letter. So the very first page is a cover page and it's a picture of the house that they're buying, but the second page is my certified mortgage plan. And I let them know every year we're going to be reviewing this. And then basically we pull it up so we can review the numbers, but I want them to know how important this is. And we can get into a financial conversation at that closing time, or we do it within the 30-day follow-up, or we do it on the anniversary. Either way, we're teaching them the opportunity cost of decisions that they make, but you still have to do it timely. Because if you overwhelm them, sometimes it's analysis by paralysis, is that the saying, where then they can't make a decision and then they're stalling, and then your realtor partner gets upset because they're like, why does it take so long for our clients to make a decision with Denise? And so sometimes it's not just a one phone call, one conversation. Sometimes it's a couple of times up until the finish line. And even afterwards, to make sure that, hey, even though your loan's closed, we still want to help you be strategic. Because remember when we picked this option and we said that we're not going to put $4,000 more to closing. Instead, we're going to pay off that credit card. Did you pay off that credit card? You know, some of it is our responsibility to hold them accountable. And so I just think it's important that you also have to be timely with some of these conversations.
No doubt. So I want to wrap up with a couple thoughts and a couple strategies for everyone. And Denise, if you could share the actual total cost analysis link that you just showed us in chat, because I'm going to pull it up on my desktop and I'm going to show everybody one more thing. So guys, you know, we are just coming out of, and in most markets, we're still in COVID quarantine. So meeting with clients, you know, this is a picture of Denise. I think this was a first-time home buyer that you met with in a coffee shop. You're not always doing that. You know, lots of times it's like you're forwarding the link to the family and they're self-consuming this content. Here at Mortgage Coach, we're here to take you from white belt, I'm a loan officer, I know how to deliver a fee worksheet, to I'm a black belt. I know how to give a family mortgage advice in every sales situation they get into. This was an FHA versus conventional analysis, but whether it was a rate and term refi, cash out refi, a seller buy down, a rent versus own, you know, non-QM, cost of waiting. I mean, you can see the list. We teach you and train you how to do all of those things. Now, a couple essential things and concepts I want you to get from today's, call it training. And this is a Mortgage Coach sales pitch. I mean, I want you guys to join the Mortgage Coach team. If you believe that these are the 4 essentials to making a good mortgage decision, which we do believe here at Mortgage Coach, that the 4 essentials for every family getting into mortgage debt is be thoughtful about your cash reserves and be thoughtful about them beyond just, do I qualify for the loan? Like, do I have enough cash in the bank, you know, to weather storms, for emergencies and opportunities? Coming out of COVID crisis, I think everybody's going to think of that differently. People are going to be putting less money on down payments. I think a lot of people are going to be moving up into bigger homes. They're going to I got a lot of equity. I'm going to sell my home, take some chips off the table, and I'm going to get that next home that has room for my home gym. It has a better kitchen. It might have a better office experience because I know I'm going to work out of my home more. They're going to be more thoughtful about that. Mortgage Coach helps you crush it with number 1. Number 2, you cannot make a wise mortgage decision if you don't look at that cost of that loan over windows of time that are relevant. You heard Denise, like sometimes it's 3 years, sometimes it's 5 years, sometimes it's 7 years. But if you're not showing options over time, you're not giving someone the smartest mortgage decision. If you're not taking into consideration, number 3, all of their consumer debt, you're not making a smart mortgage decision. And then if you're not looking at strategies like, hey, what if I refied and I took that savings and I prepaid my mortgage? Look how much faster I could do a refi and pay off my house faster. So these are the essentials, and Mortgage Coach is a platform. Yes, we are a technology company, and what Denise just showed you was our total cost analysis for the family and our advice engine for the loan officer. So we are a technology company, but we are also a community. You know, Denise, that's why she's doing this call. She's sharing what she does and how she does it. And then we take this community and this technology and we do sales training. We teach you how to get better conversion. That part of this call is both selling you on Mortgage Coach and teaching you the strategies of using Mortgage Coach. And again, what are the results for you as the loan officer? Improved conversion, less price exceptions, more referrals. And Denise, I just want to close out with some questions on that. Does Mortgage Coach save you and your team time? Like, do you see it as a time-saving tool and weapon?
100%, like not even a question. I think most people, when they start out, it's like, if, you know, I use an iPhone right now. If you gave me an Android, I'd probably fumble a little bit because I've never used an Android phone, but I know how to use it. I think it's similar with any new technology, is that you're going to fumble and you'll make an instant decision like, oh, this doesn't save me time. I'm going to keep using my amortization Excel calculator. And that's just stinking thinking. And it's just, you've got to spend a little bit of time to learn the new software. It's not rocket science. A blonde can figure it out. You can figure it out. It's game changer. It's job stability. I mean, it is not even in question. It saves you so much time. So don't make a knee-jerk decision because you've been given a new, software and just think that you're going to wake up and know how to use it. You didn't wake up and learn mortgages overnight. So a couple days max and you'll be on your way. So it's a game changer.
So to sign up for Mortgage Coach, it's $120 a month. There is no commitment in terms of time. There is no setup fee. There's a link in show notes. Like if you're watching this in YouTube, there's a link to sign up down below. No commitment. Now, I always say there's two costs for Mortgage Coach. Like if you're on the Mortgage Coach team, it costs you per month. In Denise's case, she works for a company that has an enterprise partnership with us. And so I don't know how they do it, but a lot of lenders subsidize it, pay for it. But worst case, you pay for yourself. It's $120 a month. And then I say, if you don't use Mortgage Coach, like if you're not on the team, you're paying for it. Like you are losing loans. And I think from what I hear from loan officers, like you're losing a loan a month if you're not using Mortgage Coach. What are your thoughts on not using Mortgage Coach, what it might cost a loan officer?
Oh, I mean, for someone who measures opportunity cost, it's 100%. But here's the thing I would say is, if I was, and I don't get paid a dime from Mortgage Coach, I'm not a sponsor, I'm not a brand ambassador, anything like that. But if I was a loan officer and my company wasn't aware of Mortgage Coach, I would be the one to bring it up to the sales VP or the national sales manager or even the CEO, because anybody that actually sees the system will 100% know that this makes you different, and where this business is headed in the next 5 or 10 years. I can't imagine that they wouldn't jump all over it. And so whether our company paid for it or not, I would pay it 3 times over. But if your company isn't aware, I would get Dave in front of your national sales manager or your CEO and finagle a little negotiating that's like, hey, all these other companies are using it. I mean, the top loan officers, this isn't a sales pitch for Dave, but the top loan officers across the US are using a tool. Why wouldn't you want to learn and then leverage your national sales manager, CEO, and be like, hey guys, all these companies that have these big loan officers are using the software. Maybe you should sign up for an enterprise account. That's what I would do. Fortunately, our company, I mean, we have weekly meetings about Mortgage Coach. That's how much our company values it. So that's my little negotiating tip.
Well, I appreciate that, Denise. And you have now crossed the chasm. Like I've interviewed multiple times to train on Mortgage Coach. Guys, hopefully you got some ideas. We did some training. And yeah, we did some selling. We believe that our platform adds value. And Denise, thank you for helping me sell a little Mortgage Coach. So remember guys, link down below, just click if you want to get on the Mortgage Coach team. And we look forward to having you as part of it. Thank you. And by the way, don't leave yet, Denise, but thank you very much.